Hey guys, AKIL'S here, and in today's video, I want to walk you through another real-world example of how I break down a price chart and identify high-quality trading opportunities. We'll be using a simple, but more importantly, consistent 4-step process that helps you remove the guesswork from trading. If you ever felt overwhelmed looking at charts, this video is for you. So let's hop in and break it down. Can we do an example of shorting the Euro Swiss? Of course. Soren, you want to look at the way that you traded it, or do my own analysis, and you're curious how it lines up with yours? Which one? And I'm assuming go on the daily charts. I lost my chart. Please do your own. Okay. In comparison, so what would I? And I'm basing this off what daily chart, daily, staying on daily, going daily 4 hour, or just wherever I want to take it. Okay, so we'll do daily, then we'll go down to the 4 hour. Okay, so let's take a look at the daily chart. Perfect example, because Ali is going to ask at some point, and he's going to ask to do it IPDE. So let's run through our IPDE here on the Euro Swiss. Identify, and I'll give you a clue, my favorite tool, horizontal line tool. Let's identify what has price action done. If you guys are brand new, this is the 4-step process we follow each and every time we look at the market, right? IPDE, identify, predict, decide, execute. I am a firm believer in consistent analysis plus consistent execution equals consistent results. If you analyze the market differently each time you look at a market, there's no consistency in what you're trading. If you analyze the market the same way, but you don't execute it for whatever reasons, fear, whatever, not being in your routine, you're not going to have consistent results. So we want to have consistency. We want to be machines. So let's identify, can we all agree, break and close of structure to the downside? Yep. I believe these are all-time lows. Let me just pop out to the weekly if I remember the Euro Swiss. Yeah, all-time lows. Well, I need some more data for... These should be all-time lows here. Yeah, okay. All right, so break and close below. We identify a break and close below. Oh, I got to read. No, where's my... yeah, sorry, new data thing here. Identify a break and close below. So that's my first step. So based on me identifying a break and close below, that allows me to make the prediction of what? Which direction is price likely to continue in? And the answer is going to be lower. Now, how do I know this? These are our trading rules, guys, right? The millions and millions of trades we've looked at here in the live room, right? And all the stuff we've taught you in the course, right? What is a key principle of reading a price chart that we teach you, right? The violation rule, right? Structure is a decision point. If we violate that level of structure, then we expect price action to continue in that direction. So this is all rules based, right? It can sometimes be hard to identify, right? There are sometimes different levels of structure, but once we identify a violation, the first prediction part should be easy. It's either lower or higher, and it's easy in this point. So price is likely to continue lower. Now, the next part of our prediction, and this is a little bit harder, is we want to ask ourselves, where is price action likely to go? This is one where we have all-time lows here, so there's no structure level to pinpoint, so we'd have to use other tools, but we'll kind of skip past that for now. So right now, when we make a trading decision, right, what side of the market do I want to be on? We're thinking bearish. Now, Soren wanted us to go down to our 4-hour chart. Now that we know we want to be bearish, let's ask ourselves the question, how can I get bearish? And I've got a good reason right here, right? Price action came down. We ebbed and flowed, right? Remember, all these swings are previous levels of structure, right? We put in a new structure low right here, another confirmation. And then what did we do? We came up to retest previous structure, right? Nice little pullback trade. Does anyone see a nice reason for entry within this pullback trade? Lower low, lower close. Nice rejection candle right here. Lower low, lower close. Boom, that's your sell right there. Oh, wrong tool. That's your sell right here. This lower low, lower close. If price retest structure, then look for lower low, lower close, right? Now, if you needed confirmation from the RSI, you didn't get that, so it'd be a no trade for you. But that's your trade right here. Going back on Leo's example, let's measure out stops and targets. If we're going to do ATR-based stops, our ATR at the time, I'm going to assume it was 18, but let's double check that. I'm going to take the previous, or the candle right here, previous candle. Come on, ATR, where you at now? Where you at now? 22, right? So let's take the high of this candle, which is 92.17 plus 22, which is going to be 31. No, 17, 27, 37, 39. Is that right? 39. Math is not mathing today. 39, right? That will be a 1 ATR stop. So that would be 1 ATR above the high. Double check that. I'm not confident in my math today. I'm dripping confidence in my ability to do addition. But that would be a 1 ATR stop right here. Right? Targets, if you're looking for a retest of structure lows, that would be right here. Now, the question you need to ask yourself is, are you going to get a one-to-one risk reward? You're not going to get a one-to-one risk reward to these lows. So if you're a trader that's only looking for a move to retest the lows, unfortunately, this is going to be a non-tradable opportunity. However, if you're a trader looking for an extension here, so let's take Fibonacci extension from our most recent swing high to swing low right here, and we'll just do a simple 127. Now, you're going to have a really good risk reward here. Entry again at that lower low, lower close right there. Stops 1 ATR back right there. Again, giving us some nice little breathing room, not just above this level of structure, Leo, but a little bit above this level as well. And then our target's looking for that extension, 127. That puts you down there. Delicious looking risk reward. So boom, that's a trading opportunity right there. Now, what I would do with this, simply because it's an all-time low. Like I like structure for my targets. We don't have structure. I would keep a position on for active trade management, for an active trail. So if price action continues to ebb and flow down, I can kind of trail that stop and try to get as much as possible out of the trade as possible, if I can say the word possible enough times. So I think, does that align with what you're looking at, Soren? You said the breakup structure indicates potential change of trend. Not change of trend, continuation of trend, because we're already in a bearish trend. So it aligns. It not a change of trend. I'm just being picky with words. You probably meant the same thing, but a continuation of the trend. So confirmation of the trend. Let's put it that way. Yeah, instead of a change, a confirmation. Yeah. So it looks like that aligns with you. So well done. Me and you are the same. As you guys watch it roll down, right? But yeah, this nice simple trade entry right here. Do we have anything else? We do have. Look at that. Never mind. No, we don't. I was gonna say we have hidden divergence as well, but we actually don't. This went higher than that. So yeah. Would you consider it to be RSI divergence between the central bearish pin bar and the previous one? Look at that. No, right? It would, if this weren't higher, then it would be hidden divergence. But because this actually put in a higher move, a higher high and a higher close in this bar, it does make sense for the RSI to be above that. So you can't technically look at it as hidden divergence. It is. We're extremely higher here, and we're only a little bit higher there. So, but from a technical perspective, no. So I couldn't use that as confluence. Nope. But that's a good shout, Rick. This is one where, like, I want to tell you it is, but it's not technically. It's one of those things. You guys remember the story I told you guys in the podcast about my kids in the parking in the illegal parking lot? It's one of those situations where it's like, Dad, are you allowed to park here? And I'm like, no, but yeah, I'm going to, right? One of those type of situations. So I would love to tell you yes, but technically no. Someone says, I think I know what went wrong. I used the last daily low on the daily time frame. Well, why are you assuming something went wrong? What makes you think something went wrong? Here's I have an easy way to determine if something went wrong. You guys probably know what I'm going to say, right? What do you think that way is? What is a very easy way to determine if something went wrong? So let me ask you this question, Soren. When you go back and do your trade review, did you follow your rules to a T? Ann's back. Hasn't missed a step. You know what it is, Ann. Meaning as you go through your checklist, as you look at the shameful, where's it at? The shameful rules that are, nope, that's not it. The shameful rules that are posted behind your trading desk, and you go through one at a time and read them. Did you follow all of your rules? You guys see this little Christmas tree scent thing? Can you guess what flavor it was, just randomly? You know what it smells like? Smells like money. Smells like money, baby. You know I was going there. Come on, you knew. Yeah, you knew it was. or it was there to clean up the stench of my trading because I stunk back then. It was that I stunk so bad. My wife put that in there like, man, look, I'm gonna give you one of these because your trading stinks right now. But in hindsight, now that I'm successful, I'm gonna tell you, it smelled like money. But yeah, so did you follow all of your rules? Yay or nay? What would you say to that, Soren? Yes. So it's a good trade. You did nothing wrong. You did nothing wrong. It may have not won, or it may have won and didn't do, but you did nothing wrong. You followed your rules. And assuming you have a trading plan that is testable, verifiable, repeatable, and it has been tested and has proven to be profitable, and hence that is why you're trading it, then your job is simple. Focus on the process. A good trade is a trade where you followed your rules 100%. A bad trade is any trade where you didn't follow your rules 100%. Now, that doesn't mean you can go back. That doesn't mean you can't go back and analyze it. You can go back and analyze it, see if there's any mistakes, if there are any observations that you should have made, if anything you missed. But one of the biggest problems I see traders make, and I always say one of the biggest problems I see traders make, because every problem is a big problem, is that they take a good trade that lost and they pick it apart and try to find what they did wrong, even if nothing was wrong. It could just be a loser. Like I have grade A trades where I'm locked and loaded and I'm like, dudes, this is the best possible trade in the world. And I come back the next day, I'm like, dudes, I lost. And I'm like, well, why did it lose, Akil? Well, because the market decided it was going to go the opposite direction. That's why. The market don't care. The market doesn't see my order. Oh, Akil's short. Let me get short today. No, it doesn't care. Right? The market just decided to do something else, right? It happens, right? No trading strategy 100%. So I say that because I don't want you guys automatically like tearing up and ripping up your strategy just because a single trade went wrong. But we should have that confidence from backtesting, because if you've backtested correctly, you've experienced a lot of losers. You've looked losses in the face and you've become very personal with them. But you should still always try to, review your trades and see if there's any types of observation that you can make or a way that you can improve it. So my target entry was reversed. Okay, yeah, so you didn't follow your rules. You did make a mistake. Not a good trade. Bad. So I think my interpretation of mixing the data from different time frames. Thanks for the break. Yeah. Sorry. Yeah. So you made a mistake. So that means bad trade. Doesn't mean you're a bad person. Just means you made a goof. So in your plan, perhaps, make sure the process is so defined so that it makes it hard to make those mistakes. So write it out in a way where it's like, hey, if this, then that, if this, then that, if this, then that. And as you work through one step at a time, it kind of allows you to pause, do the step, pause, do the next step, and it makes it a little bit harder to make those type of mistakes. I've done that before as well. A lot of times in day trading, I've pushed the wrong order, and it usually becomes from when you're rushing. When I'm like, I got a trade is happening, I got to get an order on, and all of a sudden I put a stop instead of a limit. Or I've done stuff where I put it on the wrong trade before, where I'm like, I'm supposed to put a trade on Aussie Canada, and I wasn't trading from my chart, I was doing it from my control center, and I do like dollar Canada because my mind is thinking dollar Canada, then all of a sudden I'm in the wrong trade. So it does happen. It does happen, but We want to minimize that. All right, hope you guys enjoyed the video and most importantly got some real value from it. This breakdown actually came from one of our daily live trading room sessions, and just so you know, there's an open invitation if you ever want to hop in and join the fun. We run 2 live sessions every day, the New York session hosted by yours truly, and the London session hosted by Jason Greystone. Both are included as part of your risk-free trial membership on the platform. So if you ever want to see how these ideas are broken down live and get your questions answered in real time and spend some time with a community instead of just lonely by yourself, head over to www.tier1trading.com and sign up. Thanks again for watching. Hit that like button before you leave and make sure you're subscribed. That way you don't miss my next video. See ya.